Hello and welcome to Morningstar Series Market Reaction. I'm Emma Wall and I'm joined today by Morningstar Investment Management's Mark Preskett to talk about the Autumn Budget 2017. Hi Mark.
Hi.
So I thought I'd kick us off with housing because that was arguably the sector that received the most attention in Philip Hammond's budget this afternoon. There was a very important pledge to help first-time buyers by abolishing stamp duty for any property worth less than £300,000, specifically for first-time buyers, and indeed said that Londoners don't get left out. Any property worth £500,000 or less will see an abolishment of stamp duty for the first £300,000. But that wasn't the only way that he helped people to get on the housing ladder, was it?
Yeah, absolutely. So previously it's all been about, last year was about Help to Buy and extending that programme and pledging, financing that programme. And he came under a little bit of criticism because it was people were looking at that stamp duty legislation and also house building properties out there. So that, you know, Philip Hammond sort of pointed out the Conservative track record is quietly proud of building 1.1 million homes since 2010, but the latest pledge of a £44 million pound infrastructure fund and building 300,000 new homes every year from around the mid 2020s definitely stacks up in terms of the number of houses being built.
It's easy enough to make a pledge though, isn't it? But whether we see the reality of those 300,000 homes built per year over a certain 5-year period is another thing.
Absolutely. I mean, the problem has been local authorities and getting planning permission for these houses to be built. Big schemes, high density housings in urban areas. But so that the devil is in the detail there, how they're going to push through these quite aggressive targets on home building. Without,
of course, touching the greenbelt.
Absolutely, yeah.
And then looking at taxes, we saw taxes raised on tobacco and on cheap booze, but they have been frozen, he said, in support of the Great British Pub, but I think in the support of the Great British Drinker as well, on whiskey, wine, beer and cider. Where we have seen tax raises for the individual is for anybody that still drives a diesel car. The duty on those will go up, and also there are incentives for car manufacturers to get their plans in line to produce clean engines, those that do use diesel, in a cleaner way. This was all part of an ongoing theme about clean air, and indeed there were measures to support electric vehicles, weren't there?
Yeah, absolutely. So you definitely feel there is a sort of a shift in sentiment around sort of clean energy, efficient driving, and getting our streets cleaner and pollution down. And so the electrical 40 million invested on electrical charging points, another 500 million in electrical car infrastructure. So it's definitely a step in the right direction in terms of that sort of moving to a more cleaner British road.
And this was quite a niche investment, electric vehicles. As you say, 40 million for charging points, around £500,000 into electric vehicle innovation. There was also a further £500 million into artificial intelligence, fibre broadband and tech startups. But all of this is only supporting a particular type of British business, a niche, small business. There wasn't much for the corporate sector as a whole, was there?
Absolutely. So the last 2 years, it's all been about these big corporation tax cuts. So we saw, corporation tax from in the budget in 2015 go from 20% down, and then last year they've ended up plumping on the 17% number that's coming in 2020. This year there wasn't really anything to do for big business, and I think maybe that was around that initial hit around Brexit sort of forced Philip Hammond to bring in another corporation tax cut. But here there was a few micro legislation, a little bit around taxation, but most of his points were around non-action, no change to the VAT threshold for small businesses, for example. Actually, he's not actually doing anything. He's just maintaining a relatively attractive level for small businesses.
Now, for most of our viewers, the thing that will impact the most and will be the best music to their ears is the change to the personal tax rates, and that's seen the personal allowance rise in line with the Conservatives' pledge at the beginning of the government to £11,850 from April, and the higher rate tax band will move to 46,350. There are also pledges to support the NHS and indeed education, with £600 for every student studying a maths A-level for schools. But perhaps the thing we haven't talked about, which is the biggest takeaway from this, is the economic backdrop, because Brexit looms ever closer, and it has actually impacted the forecasts for growth for the UK, hasn't it?
Yeah, absolutely. I thought it was quite interesting that Philip Hammond's very first statement was around Brexit, was around increasing the budget for the Brexit negotiations. And then he moved on to sort of the OBR forecast. This is the government's sort of independent body forecasting growth out, and they were very conservative numbers. The Bank of England has growth at forecast out to 1.7% out to 2020. These were materially lower, around 1.4 down to 1.3 in 2018-19. So pretty aggressive downgrades in our growth outlook. And against that, we've got this picture that the Conservative government has pledged to reduce debt levels. That's been at the heart of everything they're doing. We're bringing debt down, and so Philip Hammond was quite proud in talking about how debt to GDP levels will have peaked and will be falling over the coming years. But those falls are still pretty low compared to debt to GDP levels from the 80s and 90s, even up to the mid-2000s. We're around 50%. We're now up into the 90% level. We're pretty much there. He's forecasting it going to 86.1% in 2020. It's a tiny shift down, and compared to other European nations, we still have a problem with high debt and low growth.
Mark, thank you very much.
Cheers. Thank you.
This is Emma Wolf from Morningstar. Thank you for watching.